What if I told you that one single metal, something you can hold in the palm of your hand, surged over 147% in a single year, broke records that hadn't been touched in over a decade, and analysts are still saying the real move hasn't even started yet? I'm talking about silver. And right now, in early 2026, it may be the most important and most misunderstood metal on the planet. Welcome back. Today, we're doing a full breakdown of the silver market, where it's been, where it stands right now, and where it could be going. Let's get into it. To understand where silver is today, you have to understand what happened in 2025, because it was truly historic. At the start of last year, silver was trading around $28 per ounce. Most analysts expected modest gains, maybe a slow, steady climb. What happened instead was nothing short of extraordinary. By the end of 2025, silver had closed at around $70 to $72 per ounce, a gain of roughly 147% in 12 months. To put that in perspective, the S&P 500 would need several years of strong performance just to match that kind of return, and it didn't stop there. In January 2026, silver crossed $100 per ounce for the very first time in history, briefly touching around $121 before a sharp correction pulled it back down. As of mid-February 2026, silver is trading in the low to mid-80s, and even at that level, it's still up over 162% compared to just 1 year ago. So, what is driving all of this? There are 5 major forces at work, and what makes this bull market so unique is that all 5 are firing at the same time. The first and most powerful force is industrial demand, and it is absolutely exploding. Silver isn't just a precious metal you stack in a safe, it is one of the most electrically conductive materials on Earth, which makes it critical for the technologies reshaping our world right now. Solar energy is the single biggest driver. As countries race to build out renewable energy infrastructure, the demand for silver in photovoltaic solar panels keeps surging. Even though manufacturers are working hard to reduce the amount of silver per panel, the sheer volume of new solar installations worldwide is keeping demand sky high. Then there are electric vehicles. EV-related silver demand jumped an estimated 20% in 2025 alone, driven by advanced sensors, high-voltage wiring, and power management systems. And here's one most people aren't talking about yet: artificial intelligence and data centers. AI infrastructure is emerging as a brand-new demand source for silver, using it in high-efficiency electrical components and thermal management systems built to handle extreme power loads. Industrial demand now accounts for more than half of all silver consumption for the second consecutive year running. The second force is a supply deficit that has now stretched 5 consecutive years. The world is consuming more silver than it is producing every single year. Global mine production in 2025 was estimated at around 813 million ounces, virtually unchanged from the year before, and there's no major surge of new supply coming anytime soon. Starting a new mine is expensive, slow, and risky. It can take a decade just to go from discovery to production. Meanwhile, physical silver supplies in London vaults have already declined somewhere between 30 and 40%. That is an enormous drawdown of above-ground inventory, and it's happening quietly while most investors aren't paying attention. The third force is geopolitics and global uncertainty. The ongoing conflicts in Ukraine and the Middle East, combined with escalating trade tensions between the United States, China, Canada, and others, have been pushing investors toward safe haven assets. And silver benefits right alongside gold. Trump's tariff announcements rattled markets repeatedly through 2025 and into 2026. Interestingly, silver was exempt from the April 2025 reciprocal tariff announcement, but the surrounding uncertainty has continued to send money flowing into precious metals. The fourth force is monetary policy. The Federal Reserve has signaled multiple rate cuts through 2026, and markets are currently pricing in around 60 basis points of easing by year-end. When interest rates fall, the opportunity cost of holding non-yielding assets like silver goes down, which makes silver more attractive to a wider range of investors. We've seen this play out in real time over the past year, and it shows no signs of reversing. The fifth force is perhaps the one most investors are underestimating. The U.S. government has now classified silver as a critical raw material, a designation that dramatically boosts its strategic profile and draws serious institutional attention. ETF demand for silver surged in 2025, with projections of an additional 70 million ounces flowing into silver exchange-traded products. This is not retail investors buying coins. This is big money taking a structural position. Now let's talk about where silver stands today and what happened with that jaw-dropping crash from $121. After briefly touching its all-time high, silver lost nearly 50% of its value in a matter of days. U.S. Treasury Secretary Scott Bessent attributed much of the extreme volatility to Chinese speculative trading, describing it as a speculative blow-off. And he's not wrong that speculative excess played a role. But here's the key point. Even after that brutal correction, silver is still up over 162% from a year ago. Many analysts are viewing the pullback as a healthy reset before the next leg higher, not the end of the bull market. Investors are now watching U.S. jobs data and inflation numbers closely for signals on the Fed's next move. What are the experts saying? Mike Maloney of Gold Silver. COM expects silver to top $200 per ounce, especially if gold continues its own historic run. Alan Hibbard from the same firm believes silver could rise by over $100 from current levels in 2026 alone. Some analysts, like those at Investing Haven, are more cautious in the near term, suggesting a potential retest of lower levels before the next major move, and Sprott Asset Management has flagged that silver is particularly vulnerable to a supply shock, meaning if supply falls short unexpectedly, prices could spike in ways that are very hard to model or predict. The long-term consensus is firmly bullish. The near term is volatile, and that volatility goes both ways. As for risks, and there are real ones, the biggest is thrifting. If technology advances faster than expected and manufacturers dramatically reduce the silver content in solar panels and EVs, industrial demand could plateau. A global economic slowdown would also weigh on silver's industrial side, even as its safe haven appeal holds up. And of course, speculative positioning can amplify any move in either direction. The run from 72 to 1-21 and back to 82s in under a month is a vivid reminder of that. Zoom out, and the big picture is hard to ignore. We are living in a world that is electrifying everything: cars, homes, factories, entire power grids. Silver is at the heart of that transformation. Supply is constrained, demand is structural and growing, deficits are deepening, and a metal that has historically been dramatically undervalued relative to gold is finally starting to get the attention it deserves. Nothing in this video is financial advice. Do your own research and size your positions based on your own risk tolerance. But if you've been sleeping on silver, now you know exactly what the conversation is about. If you found this valuable, hit the like button and subscribe so you don't miss our next breakdown. Drop a comment below. Do you own silver, and where do you think it's headed? I read every single one. See you in the next one.